eyes are on the expected outcomes of the Reserve Bank's Monetary Policy Committee meeting, with analysts expecting another interest rate hike. Now, a hike or cut will still have implications on the property market as well as those servicing mortgages. Business reporter Tumisang Ndlovu joins us now for a preview of what to expect, especially, Tumisang, for you and I. It's been a tough 2 years and many South Africans are indebted. What will a hike or a hold mean for servicing debt?
Indeed, Dudu, it has been tough economic times, but with South Africa's inflation at the upper level of the Reserve Bank's target range of between 3 to 6%, sitting at 5.9%, the dynamics have shifted since the last MPC meeting in November, where we saw a 25 basis point rate cut. But for more details, I'm joined now by TPN Credit Bureau's Michelle Dickens to get a sense of, is the analysis and consensus of another rate hike a possibility by the time the Reserve Bank governor addresses South Africa later this afternoon? Michelle, do you agree with the 25 basis point hike? Is it likely to be that or more?
Tumisang, I think there is going to be the potential of an interest rate increase this time round. The governor did mention that there was going to be a minimum of 4 interest rate increases, 1 per quarter during the 2022, 23 and 2024 period. So I think we must expect interest rate increases. Whether it is this month or whether it is in March is still up for debate. We're sitting at that top end of the inflation rate, and that's being driven by, from a consumer perspective, amounts such as fuel increases 40%, leading into transport increases of 16%, electricity increases of 14%. So consumers are under a lot of pressure. To add to that, that interest rate increase is going to add to the burden on their budgets overall. And I think consumers do need to prepare themselves for increasing rates throughout the next 3-year period, not just in this meeting.
At times, the expectation is that is there anything that the Reserve Bank can do to cushion the consumer? The answer from the SARB usually is that that is not their mandate. What is your position on that one?
Yeah, I agree. That's not their mandate. Consumers are faced with high living costs. The top 4 being food costs, transport costs, housing costs, and health costs. And in order to manage on those budgets, a lot of credit extension is used, just from a living perspective. And so consumers are faced with job weakening, faced with limited increase in terms of salary growth. And so they have a double whammy from a salary growth limitation as well as now an increase in potential interest rates adding to the expenses overall. So consumers really do have a hard time, a tough time at the moment.
Absolutely, but one last question, Michelle, would be around what then the expectation should be, especially with the precarious situation that the South African economy finds itself. There's usually an argument around whether it is the right time to be hiking rates, but we are working towards some sort of normalization here.
Yeah, I think interest rate hikes are coming. They're absolutely coming, and they will be coming for the next 3 years, and consumers really do need to prepare themselves for that.
It's going to be tough times, but we will await the address by the Reserve Bank Governor Lesitja Kganyago at 3 p.m. this afternoon. That's it from now in our rolling coverage leading up to that event. Back to you in studio.
Tumisang Ndlovu, thank you very much.